Hello and welcome. It's another trading day right here in Lagos, Nigeria. We see this trading week is winding down, but here's what's coming up in the next 55 minutes. Ghana is set to end raw gold exports by 2026 in a push for refined bullion trade. And Tanzania introduces e-visa for tourists. Plus, Kenya private sector activity contracts for the first time in 7 months. That's according to the PMI. And it's good to have you join us. I'm Ladi Williams. Let's get a check of how the markets are playing right now. Starting with oil, we're seeing oil prices. They slipped in early trade today, and we're still seeing that continue. $64.65 a barrel. We're seeing Brent losing that $65 level per barrel, 0.3% down, and we see WTI, that's US grade, down a bigger 0.5%, $62.58. Oil prices closed around 1% lower yesterday after official data showed that US gasoline and distillate stockpiles grew more than expected, reflecting weaker demand in the world's top economy. Let's get a check on metals now. We're seeing gold held its ground today as investors are looking forward to US non-farm payrolls. That data is due later this week, that's tomorrow, to assess the US interest rate path there. We're seeing it's all green on the screen there in the metals market with spot gold there, 0.30%. Trying to get back to that $3,400 per ounce. We're seeing US gold futures, that's already there, $3,407, and a big jump for spot silver, 1.70%, leaving that $33 per ounce level, now at $35. And platinum is a shiner today, $1,122.80, a big 3.50% jump. Palladium is following this with a 2.40% jump there at $1,025. Seems like this too might want to stay on this $1,000 level, going forward. All right, to other stories now. Nigeria's Islamic finance industry is likely to expand from the second half of 2025 through 2026 on the back of increasing sovereign sukuk issuances and Islamic banking assets. The projection is according to global ratings firm Fitch Ratings, which hinges the outlook on new paid-in capital requirements and regulatory moves to develop the industry. Fitch also mentioned that the country's non-interest banks assets recorded a growth of 110% year-on-year at the end of last year, driven by a significant increase from deposits and loans, each more than doubling in value. And Nigeria's manufacturing sector sustained its expansion for the 6th month as the Purchasing Managers Index rose to 52.1 points in May. The PMI reading, which is according to the central bank's latest release, is primarily attributed to the growth in activity from 3 sectors, which are the agriculture sector at 53.4 points, services at 51.7 points, and industry at 51.6 points. Further highlights of the report shows that 20 sectors reported growth in activities, with petroleum and coal products recording the highest increase within the month, while 16 subsectors recorded declines, with paper product reporting the highest number. The report also shows that business activities as output, new orders, employment, inventories also recorded growth at 51.25, 52.5, 51.0, and 51.6 points accordingly. And reactions are trailing the latest expansion of Nigeria's Purchasing Managers Index, which is seen as a positive indicator for business activities in the country. According to the CEO of Flame Academy and Consulting Limited, Mr. Oji Odemezwe, was a guest on Business Morning earlier, the latest increase in the country's PMI, which also came at the same time that Nigeria's stock market recorded its best monthly performance, sends a good signal that will attract more investments into the economy. Take a listen.
Outlook for Nigeria is actually positive, and we hope that government will leverage on this to support the business environment and encourage more investment, inflow of investment, both foreign direct investment and domestic investment, so that we can see this economy go back to our growth level of above 6% GDP growth. we can achieve it. This economy can actually achieve double-digit GDP growth. We need to, ramp up a lot of infrastructural concerns, particularly energy. Energy is still a big concern because these are things that slow down activity. If there's terrorism and low, threat to the life of the farmers, the activity will also slow down. Purchasing capability will also slow down, and these things impact PMI. Imagine we are gradually even seeing some growth in PMI right now. Imagine if everybody is so safe to move around, not just to go to their farm, but also carry farm produce around the country. Because that's a major issue here, being able to save them or put in silos and store them and be able to do other activities. So there is hope for this economy, but we need to start or keep doing the right thing to ramp up this activity.
And the federal government is taking its Skill to Wealth program to Lagos. The S2W, which is launched under President Bola Ahmed Tinubu's renewed hope agenda, is set to empower youths and vulnerable populations across the geopolitical zones of the country by providing vocational skills, training, and business support through the Ministry of Humanitarian Affairs. The Minister of State, Dr. Yusuf Tanko Sununu, says the program intentionally tailored to suit the social needs in the country.
I said we have government enterprise. We designed a module. Rather than saying that we are going to train individuals for 2-3 days, we thought that cannot give us the necessary knowledge, skill that is needed for the program. And therefore, we move it to ensure that we have a 3 weeks program. And in our own plan as ministry, this is a pilot study. And that's why we made selections from different states. And we thought that the best way we can get the best information and knowledge that we require is to bring you together. This is not only giving you skill, it also promotes social interaction among yourself, with people from different states becoming now friends and staying together, understanding individual culture, religious, and what have you. That is also the same thing. The concept we designed, the automobile, and also the agriculture. And in doing that, we thought it's better it should be residential, where we can have your necessary attention and time. And I must say that from what we have, you have dedicated and applied yourself to the program and training.
All right, now to our first conversation. The World Bank has highlighted that inefficient logistics significantly contributes to food insecurity in Africa. Challenges such as poor road infrastructure, inadequate storage facilities, and limited access to markets hinders the efficient distribution of goods, leading to increased post-harvest losses and the higher food prices. Yeah, addressing these logistical issues is crucial for improving food security and supporting the livelihoods of farmers across the continent. Well, joining us to discuss more, Awemfe Asende Afolayan is the co-founder and CEO, Hall 247. Join me right here in the studio. It's great to have you.
Thank you so much. I'm pleasure having you.
Yeah, so, I'm getting so used to talking about higher prices at this point. It's almost becoming a part of me now, since we've been, battling, high inflation. And definitely, we've seen the whole subsidy removal and all of that impact logistics, getting the food to the consumer. At this point, now we're talking about rams today. Ram prices, those are high.
Very high.
At this point, the prices I don't think anybody's used to, at this point. So, talk to me about transportation, delivery problems, how that's, really impacting this food availability issue, that we're having.
Larry, impact everybody, even as of today, right? Because there's a lot of inefficiency in terms of the logistics and infrastructure, right? And
I'm sure you saw the traffic coming here.
Oh yeah, it took me 3 hours to get here, So part of the problem, right? And the truth is, it's cut across, right? Because these farmers don't have access, good road networks, where they can easily get their goods to the market on time. And even beyond this is the fact that there are a lot of, lack of visibility, right, across the entire value chain, where smallholders farmers, particularly the, perishables, they don't have access to good storage system where some of these perishables, before they get to the market, over 40% gets spoiled.
But is this a Nigerian problem or an African problem? What is this what you're seeing in other African countries?
Oh yes, it cuts across. Especially, I think ours is a bit more complex because of the population. The size is huge, and which means this size is growing, and they need food to eat. So it, even though it's an African problem, but particularly Nigeria is a bit, prices continue to soar despite all of the interventions. But no matter how you produce this food, right, without efficient logistics, it's just the price will keep soaring.
Right, and talking about efficient logistics now, there's also that, we're seeing that, sending food around Africa, it takes longer if you're than the time when you're trying to send food to Europe.
Oh yeah,
and that's outside the continent. At this point, help us understand that.
I mean, you saw the World Bank report. That report is spot on. Without efficient logistics, we're going nowhere. And I was recently in the African CEO Forum in Abidjan, and at the center of the conversation is this after, where there not been enough integration, across multiple markets in terms of movement of goods, right? And that really, contribute to what we're seeing on the market.
Right, and talking about post-harvest losses, that's one that's been with us for the longest time, at this point. Are you seeing any improvements there? Do you think the farmers are, getting more creative, even with their limited resources in, stopping post-harvest losses, or what are you seeing?
Well, I mean, taking a platform, for instance, where we connect businesses to logistic assets such as trucks and warehouses, right? We've seen, improvements where, a lot of adoption is being done. Government too, they're doing enough, but we've not seen that level of investments, across the SMEs, and even beyond this, public-private partnership will have to play a very huge role in solving some of these issues.
Right, and we see that World Bank report, also speaks to fixing transport and delivery systems can help, solve food shortages. And I'm also thinking about security. Security is also a big one there.
Yeah, it is, without a doubt, right? We've seen, a lot of, government, intervention around security, but we see that if a lot of these issues can be solved, permanently.
Which one do we solve first? Security or?
Both. We have to do both, right? Because infrastructures is a big issue. And also, I mean, without the farmers going into the farm to plant, then he's not going to, this is one of the things that, but beyond this is the efficient movement of these goods. Are we getting the right quantity that is being produced to the buyers or the manufacturers or even you and I? The answer is no. A lot of it gets spoiled on the road, yes. Yeah.
Okay, when there's a problem, some people see opportunity.
Oh, yeah.
And we know, savvy investors are always looking at issues differently. And they find out ways to, solve the problem and make money, at the same time. Yeah. What opportunities are you seeing there?
A lot. Huge, right. Opportunities and gaps. They're, coin different, opposite sides, right? So what we've seen is that if the growing population, where we're having over 200 people, they need food, and they need it as at, now, right? And we've seen e-commerce, retail expanding, and at the base of this is logistics. Without it, some of these sectors that we've mentioned will not just happen overnight. And we've seen that if investors can really invest in some of these critical infrastructures that we're talking about and making it more efficient, because we've seen, even with data that we We collect a very huge data, making sure all of these touch points, and that's basically why our 247 exists, to make sure that we aggregate all of these touch points and make it more smarter, more efficient, right? An investor can do a lot more by investing in this. Investment in logistics is like investing in national resilience, right? Because without it, people will go hungry.
Yeah, and talking about the processes, when it comes to and the value chain in the logistics industry, what role is technology playing? Are you seeing technology playing a major role right now? Is it looking more futuristic, than we're used to?
Oh yeah, I will give an example. Since we started, we've been able to, reduce the turnaround time by over 300%. How are we able to do this? By just coordinating the transportation and the warehousing. Right. Without this, because there are a lot of the critical touch points must be brought together and make it more smarter, more efficient. So we've seen a lot more of adoption in terms of technology usage, and beyond this, imagine all of these warehouses being smarter, right? Having the right energy mix in terms of usage. It reduces, the price of food.
Right, and what are you seeing, going forward at this point? Because, we know the problems are there, we know the gaps are there, but you've talked about some of the opportunities and why investors, should be looking this way. What are you seeing, going forward? 2025, we're almost getting to the middle of it, at this point.
It's scary. In 2050, the urban population is projected to double, right? And which means a lot of people need this food, and they need it as at now in terms of making it more efficient. So where I see the sector going, especially if the government can, all of these governments, I'm not talking of Nigerian government alone, across Africa, they can come together, make the integration happen. Everybody is talking about after. We're talking about 1.4 trillion or 1.2 trillion people population. Making it more efficient where we don't have to ship from Europe before we get access to some of this.
Do you think Africans like to buy from Africans?
I think they do, if given the opportunity. But I'll tell you, for you to move from here to Chad, there are a lot of bottlenecks. And that's why our 247 is there to just make sure that all of these touch points is more agile and more, flexible.
Right. Hopefully, in a couple of years, we're not talking about this same problem. Hopefully, we've solved it because it seems to have been there for the longest time.
Yes.
But it was great having this conversation with you. Thank you so much, Sayinde Afolayan, as the co-founder and CEO of Hall 247.
Thank you so much
for coming on today.
Oh, it's a pleasure having me.
All right, let's head straight to the markets now. We have Anyete Edet with the details. Anyete, I know you're used to calling it a bull market or bear market, but I'm feeling we should also have a RAM market because the RAM prices are really high right now.
Especially because rams just come in is a seasonal animal.
Right.
While the other ones they're a daily animal because Monday to Friday, except they just go on a holiday, and maybe for today they allow the ram to come in.
So this week is a ram market.
And then maybe by Christmas we'll be talking about a chicken market. Chicken market. Yes.
Would that be bullish or bearish?
Exactly.
Though? Well, we'll find.
So in the midst of it all, you might call it a ram market. Well, let's just call that a ram market tomorrow when the market will be on holiday.
Market, right?
Oh no, I don't know. I don't know about Ramish market, but I know about the chicken market when the market chickens out.
Okay.
So now let's talk about intraday market numbers. Nigeria stock market, well, it's still rallying. It briefly touched this number, 113,036.22. And this was the margin at which it rose almost 0.25%. But for the tracking, this was just about an hour ago. So this number is still going back and forth. But we're hoping that this number will be able to be sustained. But the reason for this market climbing, which has raised the intraday market numbers by this margin, and then year to date to about 9.58%. This comes on the back of the likes of UBA, Zenith Bank, Oando, as well as MTN Nigeria. Speaking of MTN, it was up by 2.6%. Oando was the biggest gainer there, 9.69% at intraday, while UBA was up by 3.6%. Oando yesterday we saw that Oando's profit, when they released that impressive market numbers, which recorded quite an impressive number, and at the same time we know that Oando, which is listed on both the Nigerian Stock Exchange and the Johannesburg Stock Exchange, it recorded about a 267% appreciation in its profits after tax, which has climbed to about 220 billion naira in the 2024 fiscal year. So that's one of the reasons why the market is climbing up. And today is the last trading day for the week, and we're hoping that the market will continue, because the equities I just mentioned, I've not also mentioned some banks which are making the market to continue the rally, but most likely this market will end in the green. I'm not too sure about the 113, but it briefly touched this, and we're hoping that it would sustain that number at the close of trading for Thursday. But the Johannesburg Stock Exchange, 1.09%, and that has also climbed higher into the 96,000, heading into the 97,000 index points. We see lots of bargain hunting activities there for Nigeria's closest rival on the stock market space. Now, for the other two markets that we see on the African continent, 1% for the EGX 30, and then for the close of Wednesday's session, 1.23% higher increase for the Nairobi Stock Exchange All-Share Index, 135.36. So all the markets, intraday and the final close for Wednesday for Nairobi Stock Exchange in the greens. The greens have it for the final trading day of the week, where most of the markets will be going on a holiday. That's for the Eid al-Kabir or Eid al-Akha. That's what they call it in some parts of the Muslim countries. So that's it for the markets on the African continent. Now let's talk about Nigeria's market. We've been reviewing the month of May for the equities market, for the fixed income market, but this time let's have it for the forex market. And we have Akpanere Oputu, chief dealer with Lotus Bank, to give us details about the naira, the dollar, the FX rates, as well as the country's foreign exchange reserves, which are very, very critical to the country's economy. Thank you for joining us, Akpanere.
Program today.
Okay, so what I have here on paper is that the month of May, it has been very, so good, if I would use that word. It has been so good to the markets for the fixed income, for the equities. For the naira, we saw that the naira recorded a 16 naira gain against the dollar, and then the foreign exchange reserves also climbed all the way from 38 billion to about 38.86 billion as at the end of trading last week. Now, give us a holistic review of the markets in the month of May for the fixed income market and other markets within that space.
Judge what happened in the month of May without looking to what happened prior to now. So in the month of April, because of the US-Trump trade tariff. So the uncertainties in that market So we saw the naira trade above 1,600 levels, and
I think we have to interrupt you a little bit there, because there's a bit of instability in your network. So most likely you can join us again if we have a stable connection in your internet, please. Okay, so now let's talk more about the Middle Eastern markets. Well, the Middle Eastern markets, most of them, or all of them practically, are closed for the Eid al-Kabir holiday, Eid Akha, as you may call it. So for the close of Wednesday's trading session, it was the greens for all the markets except the Qatari Stock Exchange All-Share Index. For the Dubai and the Abu Dhabi, both on the United Arab Emirates, 0.25% in the green, and Abu Dhabi 0.45%. Let's take a look at the Saudi Arabia's market. It's also in the green. And like I mentioned, that the Qatari Stock Exchange, it was in the red for the close of Wednesday's trading session, as you can see there on the board. So, but in terms of news within the Middle East, we have it that Asian companies are in talks to list in Saudi Arabia as the kingdom is considering a new listing regime to pave the way for share sales of foreign issuers, and that's according to the chief executive of the Saudi Arabia's bourse. That's where the Tadawul, which is the index, the name of the country's index there. So lots of investment. Last month we saw Donald Trump going there. So lots of businesses are going. Many people are making. It's let's use that euphemism. It's a mecca of sort for the Saudi Arabia's Tadawul, for the Saudi Arabia's stock market, for the Saudi Arabia's economy, and that economy is actually growing, one of the biggest economies, or the biggest economy within the Middle East. So far, the market is up by 1.59% at the close of Wednesday's trading session, while the Qatari Stock Exchange, as you can see here, more than 0.5% in the red, no thanks to the impact of profit taking and as well as some geopolitical factors affecting the market. And from Middle East, let's go over to the United States. For the stock futures there, a little change. The market is expecting the weekly jobless claims due out later today. That will be at about some 7 hours away from Nigerian time, sometime at around 4:30, 5 p.m. Nigerian time. But for the Dow Jones Industrial Average, the S&P 500, and the Nasdaq futures, all in the green, 0.06, 0.01, just marginal gains that you see there. So, but on Wednesday, we saw that the Dow had slid about 0.22% on Wednesday, and that was posting its first loss in 5 sessions, while the S&P had advanced by 0.01%, and the Nasdaq for Wednesday was up by 0.32%. So the 3 major averages are tracking gains so far this week. The S&P so far is up 1%, while the Dow Jones has added 0.4%, and the Nasdaq here has jumped 1.8% week to date. And finally, let's take a look at the Asian markets. The Asian bourses, it's only the Nikkei, that's Japan's Nikkei, that's in the red, 0.51%. Kospi, which has just had a new president after that months of political turmoil there, the market is actually stabilizing, and projections have it that the Kospi, the South Korea's Kospi, will hit 2,900 before or by the end of this year, and that's relating to lots of factors. The tech companies there. You have your Samsungs, you have your LGs, you have your SK Hynix, you have so many other companies which are actually raising the country's GDP as well as some other economic indicators for the market. So that's it for the South Korea's market. For the Hang Seng, we see 1.07% increase, 23,906.97 for that market. And we also have it that the steel companies, they're still defying that increase in the tariff for steel and aluminum announced by U.S. President Donald Trump on most of the imports on steel and aluminum from most of the major economies around the world, particularly the Asian companies. But they're not their own phase. They seem to be riding along. That's talking about the steel companies. Even for India, let's talk about India. Let's see India's stock market there. The Nifty 50, if it's in the green. So Nifty 50 is in the green, primarily led by Tata Steel. But for the close of today, Tata Steel was a little bit flat. But the previous day, Tata Steel was in the green, while other markets within the Asian region was up 0.23%. That's for the Shanghai there. And talking about Shanghai, we have it at China's market. That's the PMI came in at about 51.1 in May, rising from 50.7 in April. And that is remaining above the 50 mark, which separates an expansion from a contraction. So we have it that China's economy is not is not in trouble. Initially, there were fears about the world's second biggest economy going into trouble. No thanks to maybe the Trump trade tariff. But so far, the market has been able to shrug off that fear and is poised for a growth as the first quarter or the first half of this year is almost ending. We have just about some less than 26 days away before June ends, and then we'll be counting down into the second half of 2025 and looking out for how the year would end. But so far, the market, in the midst of uncertainties, whether from the trade tariff or other geopolitical concerns, the market is still poised for gains to end 2025. So, Ladi, that's it for the markets we have for the close as well as for intraday.
Yeah, definitely. I guess the first week of June, not looking so bad, for most of these markets.
Impressive.
And,
I think it's a hangover of gains.
Yeah, hangover.
Yeah.
At this point. We'll see if that continues, though.
I'm very optimistic.
The other weeks of June. And remember what I called it prune in June?
Yeah.
Maybe that might not work.
Yeah, Ladi, but I told you about my crystal ball. I'm always proudly talking about my crystal ball because it's a very accurate.
One day you show me that ball, though.
Exactly. So you got to promote your market. You don't make someone to promote your market for you.
Exactly. Thank you so much, Anita, for the details there on most of those markets that we track. All right, to other stories now. Let's see what's happening in South Africa now. We see the South Africa's Department of Agriculture is extremely worried following the discovery of a foot and mouth disease case at Gauteng feedlot facility owned by Karan Beef. That's the country's largest beef producer. The detection has raised serious concerns about the potential spread of the disease, with the government warning that other producers, particularly those with less stringent biosecurity measures, could also be at risk. Our South Africa correspondent, Innocent Somoza, reports.
Foot and mouth disease, or FMD, is a highly contagious virus disease that affects cloven-hoofed animals such as cattle, pigs, sheep, goats, and some wildlife like buffalo and antelope. It is caused by the foot and mouth disease virus, FMDV. In a country like South Africa, with a significant agricultural sector, an FMD outbreak can disrupt meat exports, threaten food security, cause financial losses to farmers and the economy. Di Pepeneneng Serage, Deputy Director General of Agricultural Production, Biosecurity and Natural Resources Management in the Department of Agriculture, says if a biosecure establishment such as Karan Beef could get FMD, others that are less biosecure are in danger. But what immediate steps is the department taking to assess and strengthen biosecurity protocols across others less? Serage explains.
Steps that the department is taking to ensure that biosecurity measures are strengthened will involve shortly, after Minister signs a directive, what we call Section 9(1)(b) of the Animal Diseases Act, which will be about controlling of all cloven-hoofed animals in the country, the movement thereof. So that is the one way of strengthening the adherence to biosecurity measures, which farmers already know of, but for some reasons they do not adhere to. So we'll also be controlling auctions and movement, transportation of livestock in the country.
Serage says this is not classified as a disaster.
Government doesn't have to really have any financial assistance to farmers for things that like FMD outbreak, which is not a disaster. Definition of a disaster is about things that could not be prevented. Foot and mouth disease cannot be classified as a disaster because if farmers adhere to biosecurity principles, we wouldn't have FMD.
With the department currently dealing with outbreaks in KwaZulu-Natal and now in Gauteng, questions around whether or not South Africa's vaccine supply chain and response capacity is adequate to handle multiple current FMD outbreaks. From Mpumalanga, South Africa, Innocent Somoza, Channels Television News.
And to other stories now, see Ghana will stop exporting raw gold by 2026 as part of a government drive to add more value to its mineral resources and improve earnings from the gold sector. The Ghana Gold Board, Goldbud, announced that it is working with local refineries to shift from exporting Doris, that semi-processed gold, to fully refined bullion. This marks a major change in the way the country earns from its position as Africa's top gold exporter and producer. And the Parliament of Ghana has passed an urgent amendment to the Energy Sector Levies Act, increasing the energy sector's shortfall and debt repayment levy by 1 Ghana cedi per litre of petrol and diesel. This move aims to address severe financial challenges in the energy sector, including a $3.1 billion debt and a $632 million funding gap required to restore key financial guarantees after defaults and payments to energy providers like ENI and Car Power. The energy sector's shift from hydroelectric to costlier thermal sources whose fuel costs are not covered by current tariffs has worsened revenue shortfalls. The government argues the levy is vital to prevent power shortages and ensure the sector's financial sustainability. And also, see, Ghana signed a memorandum of understanding with international oil companies to extend licenses for its key offshore oil fields, Jubilee and 10 until 2040, locking up to $2 billion in new investment. The agreement involves partners Tulu Oil, Cosmos Energy, Petrosa, GNPC, and Explorco, and will support the drilling of up to 20 new wells in the Jubilee field. The extension is expected to significantly boost proven and probable oil reserves, enhance energy production, and support long-term economic growth. It also reflects investor confidence in Ghana's offshore energy sector and lays the groundwork for updated development plans, new gas sales agreements, and parliamentary approvals, all targeted for completion by the third quarter of 2025. Officials from Tulu, Cosmos, and Ghana's Energy Ministry hailed the deal as a strategic move to ensure fiscal stability, expand reserves, and contribute to the country's development and energy security, while rebalancing investment with climate commitments. And away from Ghana, now the Tanzanian government, through the Immigration Department, has introduced an online visa application system, that's an e-visa, allowing tourists to apply for visas from anywhere in the world without having to visit an embassy. The initiative aims to simplify the visa acquisition process and attract more tourists to visit the country. According to the Deputy Minister for Natural Resources and Tourism, the government has amended the 2023 immigration regulations, allowing tourists holding a valid visitor's pass to travel to other East African countries, that's EAC, and return to Tanzania without having to reapply for the pass, as long as that visa remains valid. And Kenya's private sector activity contracted in May 2025 for the first time in 7 months. That's according to the Stanbic Bank Kenya Purchasing Managers Index, which dropped to 49.6 points from 52.0 points in April. A reading below 50 indicates a contraction. The decline was driven by weaker performance in construction, wholesale and retail and services, while agriculture and manufacturing showed growth. Business output shrank at a fastest rate in 10 months, although the overall downturn was mild. Business confidence hit their record lows, with only 4% of firms expecting improved conditions over the next year, amid consumer caution and economic uncertainty. Inflation eased slightly to 3.8% in May, and the economy grew 4.7% in 2024, with 5.3% growth forecast for 2025. And the Reserve Bank of Zimbabwe is now closely monitoring inflation after the annual Zimbabwe gold rate accelerated by 6.4 percentage points last month to 92.1%, with the bank expecting it to continue rising through September. In its May monthly inflation report, the Zimbabwe National Statistics Agency, that's ZimStat, reported the ZIG annual inflation rate to be about 92.1%, an increase from 85.7% recorded in April. Meanwhile, the year-on-year US dollar inflation rate decelerated to 13.9%, a marginal 0.5 percentage points from April, showing that high greenback pricing remained. However, some international lenders and experts disagree with the RBZ governor's prediction, owing to the exchange rate remaining controlled, thus leaving this important metric susceptible to swings. All right, yeah, we did we did talk about RAM prices earlier, and there were reports there were seeing prices up over 100%, depending on where you're buying from. Let's bring in FDC analyst there, Jawole. Great to have you on the show.
Hey, good afternoon, Ladi. Thank you.
Yeah, good afternoon. And it seems I'm seeing on my way to the office, even though I had to go through all of that traffic, I'm seeing different RAM spots all over the corner. It's not just Kara at this point, but what are you seeing with the prices?
Yeah, our prices have gone up, but that's not new in Nigeria. Which is up 100% from about 200,000 naira last year. And what we are seeing, of course, with the price, one is that there's reduced supply. So typically, Nigeria gets some of its livestock and rams from ensure enough supply for them, because about 90% of Nigerians are Muslims, and they would also and that affected supply in Nigeria. Yes, so that has also that has led to
All right, definitely the network there not allowing us have this conversation as freely as would like it to, but definitely that was Jawole there trying to make sense of these prices of this RAM price and livestock, but definitely the focus is on RAM. RAM prices at this point, we're seeing some markets selling as high as 200,000 naira, depending on the size. We've also heard reports of some parts selling as much as $1 million naira for a very, very big RAM. At this point, that's definitely a huge sum. And we're also seeing people having to travel. At this time, definitely we're also going to be looking at the cost of traveling. We know how high demand impacts most of these sectors, and definitely looking at the RAM market now, demand is really high at this point, but we'll also need to talk to some of those sellers there to see if they're making as much sales, because we know some some products are not elastic or inelastic when it comes to demand. Their high price could discourage demand, but definitely this has to do with religious activities. So definitely, some people might have to, spend as much, trying to go on with their religious activities. So, definitely a lot to unpack there. We're still tracking these prices, and yeah, I've heard some people talk about trying to make some of these purchases after the holidays. Maybe the prices will come down, at that time. We'll definitely find out, but we'll keep tracking what's playing out. All right, to all stories now. See, the Minister of Foreign Affairs, Yusuf Tuggar, is in a meeting with private sector leaders in Lagos to discuss the West Africa Economic Summit scheduled for June 20th to 21st in Abuja. In attendance are chief executive officers of corporates from Lagos and countries like the Gambia, as well as officials of the Economic Community of West African States. The minister believes that with a potential market of 400 million in the region, the summit will offer the much-needed platform to initiate business deals and foster closer working relations.
The empirical data presents a sobering reality. Intra-African trade remains limited, constituting approximately 15% of the continent's total trade volume. Within the West African sub-region, this figure is even more modest, fluctuating between 12 and 13%. When juxtaposed with the robust intra-regional trade levels observed in Asia, around 60%, and Europe approaching 70% by some accounts, the comparative deficit is striking. This disparity underscores a critical insight. The constraint of Africa's, and more specifically West Africa's, economic integration is not a function of lacking potential, but rather of deficits in coordination, cross-border infrastructure, and sustained political commitment.
All right, definitely it's all about getting the ECOWAS region working when it comes to trading with each other and, getting the continent, on the move at this time where we're seeing everyone there with that protectionist stance. All right, we'll take a quick break now. When we come back, we'll find out what's playing out in the market. Just stay with us. All right, let's get a check on what's playing out with the markets. And we see the big half of the screen there with Bitcoin holding that. And in the green, with the altcoins taking a beating there with BNB down about 0.51%. Solana is down big 1.24%. So we're seeing major altcoins there in the red. And Ethereum, that's the king of the altcoins, that's up 0.11%, 2,628 dollars there. Is this market trying to get back in bullish territory, trying to get back to those highs? We're not sure yet, at this point, because we're still seeing jitters there with most of the investors in the crypto space. So that's a color. That's a good sentiment. How are investors feeling in the market? Is it the greedy market? At this point, I know we're used to checking the fear greed index. Was greedy for a while when we got to that new high. Extreme greed. That did hit again, but obviously when you see that drop, a drop from $111,000 to $105,000, definitely might be nearing maybe a neutral zone or maybe tethering into fear. Let's look at the headlines now. We see JP Morgan, they've started accepting shares of BlackRock's iShares Bitcoin Trust, that's IBIT, as a collateral for loans. The bank plans to let trading and wealth management clients use some crypto-linked assets such as spot Bitcoin, exchange-traded funds as ETFs as collateral for loans starting in the upcoming weeks. JP Morgan will provide financing backed by shares of IBIT. According to a Bloomberg report there, for some clients, the bank will also factor crypto holdings into assessments of net worth and liquidity, putting them at the same level as traditional securities like stocks. And we're also seeing USDC stablecoin issuer Circle. They're pricing their IPO above the expected price range at this point. That's fintech firm Circle Internet Group, which issues the USDC stablecoin. They've priced an upsized initial public offering above the expected range there. The offering now totals 34 million shares at $31 each, up from 32 million shares, and an expected range of about $27 to $28 per share. And the company is offering 14.8 million shares and selling stockholders 19.2 million shares. Circle also added that the underwriters have a 30-day option to purchase up to an additional 5.1 million shares. Shares are expected to begin trading Thursday on the New York Stock Exchange. That's today under the ticker CRCL. USDC is the 7th largest cryptocurrency per coin market cap, with a market cap of about $61.5 billion. Yeah, we know that most of the stable coins there, their total market cap, that's been going up, for a while now, and definitely we see that the role of stable coins in the cryptocurrency market, definitely investors try to run into stable coins when there's a lot of volatility so that they can, buy back, some of their assets cheaper. But with the stable coins, they get, stability with their portfolios there. So, definitely we've seen, times when the market gets bullish again and investors start to move away from most of those stable coins and try to get back into most of the assets that they're used to there. We're also seeing stories about Ethereum there. The foundation, they have a treasury plan there with a 66% spending cut to boost Ethereum's value. They're wondering if that's going to boost. That's according to analysts. So the foundation has unveiled treasury plans to ensure enough liquidity and significantly reduce operational expenses from 15 to 5%. That's nearly a 66% cut under its updated treasury policy. And part of the strategy will include conservative approaches to gain reasonable returns on its investment without risking liquidity that could undermine EF's operations there. Hiazo Wei Wang, a director at EF, noted that they will favor audited DeFi protocols for reasonable returns on the foundation's reserves. This would include tokenized RWAs, that's real-world assets, liability match reserves, and short-term liquidity assets. We're also seeing the largest Bitcoin holder cohort is accumulating as Bitcoin eyes 110,000 level again. Would that level hit? Would it be hit again? At this point, we're seeing some technical analysts there, showing different patterns, when it comes to what the charts are saying about Bitcoin. Could it be getting to a triple top or a double top, at this point? And we know how that works when you're following the trend line. If it hits that trend line twice, there's a risk the price could come down, come running down. So most of the investors there are watching out to see how that plays out. And what that means for the altcoins, like the leader there of the altcoins, that's Ethereum, it's not really appreciated as much as Bitcoin has so far. There's also that sentiment about Bitcoin, leaving most of these altcoins, in the dust. We've seen Bitcoin rise from about $60,000. That was, I think, the high of last year, rising all the way above 100,000. Ethereum did get to 4,000, but it's not been able to get back there, which begs the question, is it time to move away from altcoins and focus on Bitcoin? What if you do that and Bitcoin, starts to lag, and we now see that alt season that most investors talk about, come again? So definitely a lot for investors to, watch out for. Then you also have the issues around tariffs. We've seen how that's impacted investor sentiment, going forward. And, some of these pauses, they might be expiring, soon, at this point. So negotiations are ongoing, but investors are not comfortable, with some of the, from the answers we're getting, at this point. But we'll still be tracking and see how what investors should be looking at, at this point. And tomorrow we have the final trading day for this week. So far, it's been a good week for most of the asset classes that we track. Maybe we might have weekly gains for oil and gold. We'll definitely keep watching out for that. But thank you so much for watching. We're able to get some of our guests today because of internet issues. Yeah, it does happen every now and then. Well, thank you for watching. I'm Ladi Williams. We'll be back again tomorrow with what's playing out with these markets. From me and the team right here at Channels HQ, it's bye for now. Enjoy the day.